JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 21st of September 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, let's jump into the charts. So normally I used to start off with Nikkei, but Nikkei is closed today, and well, Japan is celebrating respect for the Age Day, according to the calendar here. But you can see that the Shanghai Composite here is up and running. It still has around 50 minutes left of trading, so let's see what's happening here. So we can see that this morning it did open initially with a small little gap here to the upside. However, the bearishness kicked in here and the index drifted back down. It dropped back below this level, below this 3,336 territory that I talked about last week. Now on the positive side still, the fact that yes, the index did drift lower, it moved back below this area, below this hurdle, but on the positive side it remains above its 21-day EMA here, shown as the yellow line. So let's put it this way, let's given that it moved back below this 3,336 territory, it still is supported by the 21-day EMA. We'll keep an eye on that one. If it continues to provide support, then a nice reversal here and a move back above this barrier, above this hurdle, could send this index further north, maybe towards the 3,377 territory here, or even going further towards the upper side of this range where the index is currently trading in. So yep, we'll keep an eye on that one. In case this suddenly starts dropping back below the 21-day EMA and drops below this little area right here, the 3,302 territory, well, in a way we could round it up towards the 3,300. If it drops below that, then yep, we could maybe aim for a few lower areas here, and we could maybe target this lower side of the range here near the 3,181 zone. But again, let's not get ahead of ourselves. For now, let's keep an eye on this 21-day EMA, see how it's gonna be, how the index will behave in relation to it. If this 21-day EMA continues to provide support, then we could see a nice reversal here back to the upside, especially if the price climbs above the 3,336 zone right here. Jumping into Hong Kong's Seng Index. Now here the situation is a little bit worse, I would say. You can see that the index is right now drifting lower. It is falling below its key support zone near this 24,000 149 zone right here. So, or in a way, you could round it up towards the 24,150 territory. So basically, in other words, still this is looking quite bad here for this index. But if by any chance it will manage to close today above this barrier, above this hurdle, now this move lower here could be seen as a false breakout from which, from where, and from this area right here, the index could reverse and push back to the upside here. But of course, let's not over speculate on this one. In a way, for us to maybe consider the upside again, ideally a push back above the 24,827 zone right here, marked by the high of last week, could do the trick for more buyers, and we could see this one climbing up again. For now, we are keeping a close eye on this key support zone right here near as I said, this 24,150 territory. If we do get a daily close below it now, well, I mean, maybe not all is good here in the bull block, and we could see the bears kind of taking control here for a while, and then yes, of course, these lower levels could be met, like for example the 23,685 zone right here, marked by the low of the 15th of June, or it could continue sliding here, aiming for this 23,000 and 090 level, so marked by the high of the 29th of May. So keep your eyes on those guys, and like I said, the most important right now, keep your eyes on this 24,150 territory. Now jumping into German DAX, and here, as you can see, on Friday the index drifted lower. However, it still remained above this 21-day EMA. So as you can see, this 21-day EMA continues to provide decent support, and even if it drops below it, still there is a chance for the bulls to step in somewhere near this this upside support line taken from the low of the 15th of June. However, if you remember last week, I told you guys that if this upside support line breaks, then, well, basically, let's not forget that we are seeing here a nice rising wedge pattern here, which, well, according to all the TA rules, tends to break to the downside. So that's why wait for, if you're looking for some lower levels here, wait for a break of this lower side of the rising wedge, and then aim for some lower, for some downside. Until then, it could drift lower, it could find support near this lower side of the pattern here, and then rebound and push back to the upside. So that's why, guys, until we get a break, we cannot really talk about the downside here, guys. So, and looking at the cash index and where it's currently sitting at, it's currently sitting near the 13,000 and 030 territory, so basically very close to this upside support line. So keep your eyes on that one. Let's see how all this is going to play out, but at the moment, if this lower side of the pattern remains intact, well, I mean, the bulls could still be active, and they could still try to bring the price back to the upside here. But like I said, it's a very close one. Gold. Now, gold here is a bit of a tricky one, and first of all, let me get rid of this upside line, no longer valid. What I'm going to be focusing here mainly will be this little symmetrical triangle here that we've got working out for ourselves. So basically, and as long as it stays within this little pattern, we cannot really do anything. We need to wait for that confirmation break. So basically, if you're looking for some downside here, then wait for a break of this lower side of the triangle, and then look for further declines, because still all this here, it could be a tricky, and as long as it kind of oscillates around this 21-day EMA, we're not really touching this one, we're just observing the price action. And in terms of the upside, if the upper side of the triangle gets broken, and also the price climbs above the 1972 territory right here, marked by the high of the 16th of September, now this is where it could become very interesting, and yep, higher levels could be met. But again, like I said, for now, we're just watching. Now, WTI Oil, and this one, I haven't looked at this one. Well, last week, in the beginning of last week, I looked at this one, and I was saying that if the commodity struggles to get back above this above this level right here, the 38.74 territory marked by the low of the 30th of July, then yep, we could see another round of selling. But as you can see, oil climbed back up here. The only resistance, the only area where it's currently getting a hold up is near this 200-day EMA. So first of all, let me get rid of this Fibonacci, no longer needed. But now what we will do is we'll keep an eye on this 200-day EMA. If we get a nice pop above it, then yes, it could climb higher. However, to be a little bit more on the safe side, we would prefer to see a push above the highest point of August near the 43.75 zone right here, and then aim for some higher levels, because like I said, up until here it could travel higher, it could find resistance near this level, near this 43.75, and then reverse back down. It's basically maybe ending up moving sideways and ending up confirming a range here. But again, that's going a bit ahead of myself here. For now, let's keep it short and simple. For now, keep your eyes on the 200-day EMA. If that gets broken, then the next target is the highest point of August near the 43.75 territory. But if that gets broken, now this is where it could open the door towards the high of the, or should I say, the highest point of March near the 48.64 zone. So yeah, for now, keep your eyes on this one, and like I said, let's see how all this is gonna play out. But yeah, for now it is how it is. It's very close. Like I said, it's currently sitting at this near this 200-day EMA. But if you want to aim for some higher levels and you want to be a little bit more on the safe side, wait for a pop above the 43.75 territory, which is the highest point of August. Now jumping into Ethereum, which I just closed out. So let me just jump into Ethereum very quickly, guys. So now then, Ethereum. So after it, as you can see, the crypto here is struggling with this 390 territory, which is marked by the high of the 13th of this September, and last week it did try to overcome it, and it did at one point. We did have these false breakouts, as you can see, but neither of the daily candles managed to remain above this area, and yep, the crypto started drifting back down. Now don't get me wrong, that doesn't mean that it's going to start moving all the way lower here. However, it increases that chance. The only thing is that probably preferably what I would like to see here is a drop back below the 353.50 territory here, marked by the low the 13th of September, and then yes, we could aim for this upside support line, because don't forget that overall the trend is still to the upside, and it may stay like that as long as the price continues to balance above this medium-term upside support line taken from the low of the 13th of March, and in a way, something like this here could be possible if we see a drop below this 353.50 zone. Yes, we could consider maybe a bit of a decline here, a larger move, larger correction to the downside, and then of course all eyes will be on this upside support line. But if this upside support line gets broken and the price falls below the lowest point, the current lowest point of September here near the 311 territory, now this is where it could become very interesting for these sellers. So again, guys, we will consider this scenario a move towards this upside support line if we get a drop below the 353.50 zone. If it doesn't move here and straight away pushes above this 390 territory, now this is where yep, we could aim for some higher levels again. So keep your eyes on that one. Now jumping into AUDJPY, I've talked about this one last week. To be honest, I'm just gonna give you a quick update because not much has changed since last week. But basically, what I'm waiting here for is a drop below this 76.12 territory right here, marked by the low of the 9th of September, in order to aim for let's say lower areas, because at the moment you can see that the pair is getting a hold of here. Last week it did provide decent support, this area, so now, I mean, and this morning as well, you can see that the pair did drift to test this this hurdle, from which it kind of is right now rebounding. To be honest, yes, it might rebound again and push higher, but to be on the safe side, if you're looking for some higher levels here, if you're looking for some upside, then probably wait for at least a push above the 77.65 territory right here, and then we could consider maybe a bit of a move higher towards the highest point of August near the 78.46 zone, or even above that. But at the moment, I mean, it seems that the upside could be slightly off the table because we are trading also below the 21-day EMA here. However, we cannot really talk about lower areas yet until we get this nice strong move below this 76.12 zone. Ideally also we would like to see the daily candle remaining below this area, and then yes, lower levels could be met, like for example the 75.61 zone right here, or the 74.83 territory marked by the low of the 30th of July. So keep your eyes on that one. USDJPY, this one is an interesting one, and everything's working out according to the plan that I talked about last week. So basically the pair did drop below this 105.30 territory and pushed further south, where I was saying that our next target is the lowest point of July near the 104.19 zone. As you can see, the pair drifted to this area. It fell shy of just a few pips from reaching this hurdle, but to be honest, we will take it. We'll take that. This is a successful kind of move here. So now the big question here is, can this 104.819 territory hold? If it can, then yep, we could consider further declines. Such a break here would confirm a forthcoming lower low, and maybe more sellers could be joining in and potentially driving this one towards the low of the 12th of March here near the 103.05 level. Excuse me. But of course, there is a chance still that this area here could provide support, and we could see a bit of a rebound here. Now, if something like this does happen, in order for us to maybe go for some higher levels up until this downside resistance line, because don't forget that overall we're still trading below this downside resistance line taken from the high of the 24th of March. Now, if we're looking for something for some higher levels here up until this downside line, then preferably a pushback above the 105.30 territory right here could do the trick for more buyers. And probably by the time this pair could reverse and climb higher here, the 21-day EMA would be very close to this barrier as well, and a nice push above this barrier could place also the rate above this 21-day EMA, which some buyers could see as a nice positive. Now, jumping into GBPCAD here, and here the pair. So basically, all this kind of worked out nicely. I talked about this pair previously, and when I was saying that if we see a drop below this 1.7208 zone, then yes, lower levels could be met. And initially, my target was here near this 1.6942 zone, but as you can see, it overshot it and continued to drift further south. Now, let me just clear up this chart a little bit, and let me just start from the beginning. So now, yes, the pair did find support here near this 1.6811 territory. It was not far from the lowest point of June here, which is around the 1.6751 zone. So as you can see, the pair did rebound. It made its way higher. However, this 200-day EMA did provide good resistance. The pair did found resistance near this 1.7158 zone. So this is what we're going to be looking at. This is the high of last week. So in a nice good pop above this could, first of all, would confirm a forthcoming higher high, and yep, would also place above the 200-day EMA, would place the rate above the 200-day EMA, which, as I said, some buyers could see as a good sign, and then the pair could travel a little bit to the upside here. However, don't forget that we do now have a little short-term downside resistance line here taken from the high of the 31st of July. So in other words, that's the highest point of July, and if we do get a push above this 1.7158 zone, then yes, we could, like I said, aim for some higher levels, but only up until this downside resistance line. And if it does provide resistance once again, then we'll take it from there. We'll see if the pair will actually drop back down. However, like I said, let's not rush into anything here. First, let's keep an eye on this, the high of last week near the 1.7158. If we get a nice pop above it, then yes, we could aim for slightly higher levels. Now, in terms of the downside here, this is a little bit more on the trickier side. Now, if we ideally, I would prefer to see a drop below the 1.6811 zone right here, which is the low, the current lowest point of September. However, I do understand that it's quite a big move here to miss out, so keep your eyes on this low of the 23rd of July, which also is near the low of the 17th of September here, and that level is around the 1.69 80 zone. So 1.6980, a nice good drop below this could, yep, open the door towards these slightly lower areas, and yep, then of course we'll take it from there, see what he wants to do. But like I said, keep your eyes on this. This is a very short-term kind of analysis here, so let's keep an eye on these two levels. Let's see which one gets broken first. Jumping into Euro GBP, so last week, basically the euro, we saw the euro here, not last week but the week before that, we saw a Euro GBP exploding here nicely to the upside. It found resistance near the 0.9292 zone and then corrected back down. But what I was saying, that if it corrects back below this, back below the 0.91 0.9175 territory, then yes, there is a possibility to see this one moving towards the 21-day EMA here, or near this 0.9070 territory. So all this area did provide decent support, as you can see. So the pair did rebound, so everything is working out nicely. However, what I was saying to you last week, that yes, this idea here is working out nicely, but if you're looking for the upside again, to aim for some higher levels again, then ideally a nice good strong push above the 0.9175 zone, which is the highest point of June, would be needed. And ideally we would like to see the daily candle remaining above this area, and in order to, like I said, and get a little bit more comfortable with higher levels. For now, you can see that on this pair on Friday found resistance exactly right here, and this morning it's still struggling to overcome it. So let's see if it can overcome it. Then that's great news for more buyers, and this one could travel higher. However, if it struggles to do so now, then of course we will remain a little bit more on the neutral side, because if we want to look at some lower levels, ideally a drop below the low of 17th of September here near the 0.9083 zone, or even better, as I mentioned before, the drop below the 0.9070 territory marked by the high of the 17th of August. Now this is what we would need to see in order to aim for lower areas. So for now, of course, we're closer to this 0.9175 zone. A nice good pop above it may open the door towards higher levels. And finally, Euro USD. So this one is a little bit tricky. First of all, let's get rid of this upside line. No longer needed, because it got violated, and then now it's just, we can see that the rate is just moving sideways, and it's oscillating around its 21-day EMA here. The levels the two highlighted levels remain valid. We need to see a nice good break above them, above this 1.1917 territory marked by the high of the 10th of September, in order to aim for some higher levels. And for now, let's say it has still some room here, so we'll wait, and if we do get this break above this barrier, then yes, we will aim for some higher levels. However, if by any chance this pair suddenly reverses back below the 21-day EMA and drops below the 1.1753 territory here, marked near the low of the 9th of September and near the low of the 17th of September. Now this is where it could become very interesting for the sellers, and we could see this one sliding towards the 1.1570 zone, or even this 100-day EMA shown as the green line. But again, for now, guys, until it's going to be trading here in this little range, I would say we will remain neutral and just, like I said, wait for that confirmation break. So guys, I really hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my trader's tea time is always 13:15 GMT. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.